On the podcast with us today is Pancham Gupta. Pancham, welcome to the podcast.
Thanks, Dan. Excited to be here.
Well, Pancham, I want you to get us started before we dive into this, start diving into this 76 unit property that your group acquired in May of 2018 called Chapman Pointe Apartments, located in Dallas, North Carolina, which is one of the Charlotte submarkets. Before we dive into that particular asset and that acquisition, talk to the listeners a little bit about who you are and your background and where you are right now in the multifamily space.
Sure. So I'm an engineer by profession. I've been in computer science and finance, call it fintech industry for last 14 years. I recently have quit my job and gone into multifamily syndications full time. So I started out small back in 2012, and slowly realized that this is not scalable, and started scaling up with buying multifamily buildings. And back in 2017 we closed our first building, and now that I'm doing this full time, speaks for how passionate I am about this, leaving my very high paying job just to do this full time.
Well, that's pretty exciting. I remember meeting you for the first time and now kind of seeing you during this transition process and getting to the point where you are now. It's pretty exciting to kind of see this, where you are.
No, yes, it's absolutely exciting. And I'm super excited to be here today to talk to you about this property.
Awesome. Well, let's dive into this one. This is a 76 unit property acquired in May of 2018 called Chapman Pointe Apartments. So talk to us first about maybe how you actually found this deal.
So it's a funny story. I'll try to keep it short. So I'm on a lot of broker lists for these deals across different submarkets of Charlotte and also many other states. And one day I get an email stating as a subject line, off-market deal, Dallas, North Carolina. I'm like, is there a Dallas in North Carolina? All right, whatever. So I actually look it up, and I see it's it's one of the Charlotte submarkets. It's in Charlotte MSA, and very close to the airport. I do the numbers the same day. It looked very good. It was 1999 built, and I do the numbers, and the numbers are great. For the very first time, and in my syndication career, I got so excited about this deal. And the same day, we put an asking price offer with the broker. And the broker calls me the next day saying, sorry guys, we have a full price offer, 30-day close, a lot of hard money. I forget how much it was, day one, and all cash. And I'm like, sorry, I can't beat that. So, all right, I will pass on. And there goes that. And it was January of 2018. I still remember that very vividly. And then I go to one of these conferences, best ever conference in February, and I listen to Trevor. He's one of the business coaches and mindset coaches. And he was like, you're not doing enough. You cannot say you don't have a deal. So I come back, and I, very motivated after listening to that talk, and I'm calling all the brokers I know. And I called this guy too. And, we've never met before. And I'm like, hey, Mike, you remember we spoke about this deal almost 45 days ago. What happened to it? He's like, it just fell through the contract yesterday. I'm like, really? All right. So, we put an offer on it the same day. And he's like, yes, who are you again? Can you explain what you do and all that? So it was 6:30 in the evening. This was right after work. I still remember I was at work, and I was about to catch my train back home. I stopped doing everything that I was planning on doing. And I'm like, okay, let's talk. Do you have 2 more minutes? And he's like, yes. So I gave him my spiel, and he's like, I need everything from you, from the broker letter to the proof of funds to what you have done so far, everything that you got, give it to me first thing tomorrow morning. And I'm like, you got it. And I sent everything to him the same day by midnight. And we got the deal.
Wow. Well, and I wonder if he would have even remembered you to follow up with you if you didn't follow up with him.
No, he wouldn't have, because he didn't even remember me.
Wow.
Now we are good friends.
I bet so.
Yeah.
That's pretty cool. I mean, I've heard. I mean, even our group has had a deal that's come back to us, 4 weeks later after the first buyer couldn't perform or whatever. But you were persistent with that because you, after that conference and hearing Trevor, you went back and you made those phone calls and followed up with them. And what are the coincidence of you following up with that broker and it had just fallen through like the day before? That's amazing.
Exactly. It's like, when you want something bad, universe makes it happen for you.
Yeah, yeah.
That's what
That's
makes
exciting.
you believe.
So
Yeah.
obviously that original buyer put up some hard money. Did you have to put any hard money on this one to get it done?
No, we were very clear on this that we wouldn't want to do hard money. So we got it done without that.
Yeah, yeah. And did you end up doing it for the same offer as you had originally projected?
Yes, we
Okay.
got it for the same price. And that's what seller was asking for as well.
And so what was the purchase price on this one?
60 a door.
60 a door. So that is right at 4.56.
4.56, exactly.
Okay. And 60 per door. And this was was this your first acquisition?
No, this was our third.
Third. Okay. And when you were trying to sell yourself to the broker, what do you think it was that helped them be, confident that you could actually close this deal?
So I told him about the history, how we performed on the previous deals. And I told him that I would get him anything that he needs, including the proof of funds, including a letter from the lender saying that we can close, and the LOI, all of it the same, like, the next day, but I got it to him by midnight. Yeah. So I think that's for him, someone coming to save him last minute, given that the previous offer was fallen off and he could wait 12 hours for it, and seeing everything on paper kind of helped him as well. That's what my thought is,
Mm-hmm.
or was.
So obviously this is a $4.56 million acquisition. When you submitted proof of funds, what were they looking for?
They were looking for whether we have whatever our offer was. We were planning on getting 80 LTV, so 20% of the funds at the time in the bank account, and we were fortunate enough to show that in a very short period of time. We were able to. Our liquidity situation was great at that time, and some of our friends helped too, so that was good. We used that and showed it him. Use that towards that.
Okay.
Offer.
And so what would you suggest to somebody that is in this similar situation that, maybe they're going to be doing it, very similar to you and doing syndication, but they don't necessarily have the funds sitting into an account and have that liquidity there? What would you recommend? Or, have you even been in a position where you've not been able to show those proof of funds?
We have not been in that situation, but I have 2 points, 2 bullet points that people can do. One, they can, proof of funds doesn't have to be in one account. They can show a lot of people who are working full time. They have substantial amount of money in their 401ks, right? And they can use some of those statements by, taking off the names for personal privacy reasons, and just showing the record that, hey, I have 500,000 here, 500,000 there, together it's $1 million or whatever. So that's one. Second, if they don't have that, they can go reach out to friends who do have that, and compensate them for if you were to close the deal. Tell them, you know what, if you were to give me this, I promise you to pay back by $1,000, 5,000, whatever that is, up for negotiation when we actually do close the deal. So
Because it's not like that money's like at risk or anything. It's basically just, hey, here's a statement showing there's money in an account.
exactly right.
Really, it
So
means nothing.
Yeah, to be honest with you, this money actually doesn't mean anything even to the broker. They cannot even validate it if they want to do it, because it doesn't even have account numbers and all of that. It's just as a deep sense of comfort that people have these funds in some account, whatever that account is, this fictitious account, and they see the name of the bank over there, so that's good.
Yeah. So at what point during the entire process did you actually tour this property? Because I'm assuming up to this point, you haven't even toured it, have you?
No, that is exactly right. We had not toured it at that time. And once our offer got accepted, we went to the property and we toured it from outside. Because it was an off-market deal, the on-site staff also did not know that it was getting sold until very late. So we actually did not even look at the units. It was 1999 built. We did a secret shopping on it, as a potential tenants, and we could not even see the units because there was a huge wait list of people waiting. And the reason for that was it was an affordable housing section 42, which is LIHTC, low income housing tax credit property, built by the builder in 99. And they were just coming off that program. It was becoming a market rate property in a year, and it became after our acquisition.
So let's talk about that a little bit, because that's definitely a unique aspect about this particular acquisition. Because I know for a lot of groups, including ours, we shy away from those types of properties as well. It's not just the light tech, but also the Section 8, various things like that, and kind of, don't even look at a property that has that. So what was it that, number one, attracted you to this property, and that also, are you looking for these types of acquisitions, or was this just kind of something that fell in your lap and it just ended up being, a good deal because of how it was coming off of the light tech?
No, so that's a great question. We are not really looking for these kind of acquisitions, but we are not afraid of doing these or looking at these. And the reason for that is we've studied this program in detail, where like understood what is needed and what is required. And but the reason that we went forward with this particular deal was that this particular property was coming off this program and becoming a market rate property within less than a year of acquisition. So that was a great selling point and huge rental upside because of that. And if you want, I can go into a little bit what this program is
Please do.
about. So this is LIHTC. It's called Low Income Housing Tax Credit. It's Section 42 within IRS tax code. And this is the tax credit that IRS gives to the builders who actually build this property for low income housing, affordable housing. And in return, there are some restrictions on these properties, and those restrictions could be varying in nature, but mainly it is on the income, and it's area median income, AMI as they call it. They look at the AMI of the area, which is the median income within that submarket, and the rents cannot be more than 60% of AMI. So that's your ceiling for the rents. And usually this particular program goes into two periods, two 15-year periods, where there's period number one for 15 years, and then after that 15 years are gone, you go into the second phase of 15 years. And between these two, there are some stipulations where you can potentially get out of this program and not go through the second 15-year phase. And for that to happen, there are a lot of steps that have to be taken to get into that phase. And sometimes you cannot even do it. So we got we got lucky with this. It's the seller was planning on getting out of this program from the get-go when he actually bought it. So we got lucky in a sense that they were already towards the last year of this phase. And when we took over, we filed for all whatever was needed to get out of it, and by third month we were out.
Wow. And why didn't, so how the prior owner of it, was that the original developer?
No, he was not.
Okay. How long did that person own the property?
He owned it for almost 8 years, I believe.
Okay.
And the life of the property when we bought it was exactly about 15 years, 99 build.
Okay. And so why did that former owner, that last seller that you bought it from, why were they trying to get out of it before trying to do that same process?
No, so there's only one way you can get out, one time period when you can get out, when the 15 years expire. So first 15-year period. So 99 plus 15 is 2014. So they were already in the process. It takes 3 years after that. I don't remember exactly what are the steps that are needed, but it took 3 years for them to get out. And it was getting effective in September of 2018. That's what I remember. Like how, and I think they timed it this way because they wanted to sell to the next buyer by this being the selling point.
Okay. So the selling point for the next person, which was you to buy it, was the potential to raise the rents. And so you were potentially paying a little bit of a premium on top of what you would pay for the current in-place rents for that extra potential.
Absolutely. And we got that potential realized without even doing anything on the property. Almost like $150 bumps without spending time.
Wow. And okay. And so before we, dive into some of the other things on the property, let's talk about when you guys toured the property, and you also, obviously this is when you already had it under contract. You were probably already starting that due diligence process. What were some things that maybe came up during that due diligence phase? Was there anything? It's a fairly new property. It wasn't a very old property, a lot of deferred maintenance, but was there anything, was it well kept? Is there anything that came up during that process?
So the roofs were new when we took over, when we looked at the property. And in general, like you mentioned, the property was newer, 99 built. So nothing really came up except on one of the buildings. There was water coming from behind when there was heavy rain and was going, into the foundation. So we had to build a trench around the building to make sure the water doesn't go inside of it. It goes around and goes into the right drainage system. So that was one thing. Other than that, we wanted to make sure whatever this seller was telling about LIHTC was correct. So we got in touch with right agencies to make sure that was the case. And that was the case. So we had our attorneys look at it. Everything was good, kosher there. So it was good.
So when it comes to this, the LIHTC aspect of the property, and are there now still Section 8 people on the property as well, or is it all the LIHTC is gone and you're kind of turning the tenant base over? Are you doing any renovations, anything like that?
Okay, so this is one great question that you have, and a lot of people get confused. So Section 8 and Section 42, these are two different things.
So you didn't have any Section 8 on it?
Yes. So Section 8, we had some Section 8, but not a lot of it, actually very few. Section 42, which is LIHTC, that is just a tax credit that the developer gets. But and then there are some rent restrictions on the property that, your income cannot be higher than this. It doesn't mean that you have to have Section 8. Those two are completely independent things. So we did not have many Section 8 on the property.
So Section 42 is not a voucher program or anything like that. They're actually still paying, but you can't accept somebody unless you can't. They also have to have income requirements too, right?
There are some income requirements as well. And then there are some rent restrictions as well.
Yeah.
But it doesn't mean that they don't have a job.
Right.
Yeah.
Okay. And so talk about that process now that you've been into the project now. It's been a little over a year because this was May of 2018. You were able to remove the LIHTC rent restrictions and obviously any of the other restrictions income wise on the property as well. So what has that process been like when, there's renewals coming up? Are you automatically going in there and raising it 150? And if they can't afford that, you're trying to get it to another resident, or what's that process been like?
So yeah, we are already through 1 year, like you mentioned, and we have been able to increase the rents quite significantly, especially on the ones which were we did like about 10 not gut renovation, but pretty good renovations on them because they were in a really bad shape because of bad tenants in the past. And for those, we got almost about 200 rent bumps easily. And for the ones which we did not do any renovations, but just a regular turn, we still got about $100. So to answer your question, we did not really get any resistance from any of the tenants.
Okay.
On that.
And are most of the tenants leaving, or are they staying with those rent bumps?
Most of them are staying. People who have been, living there forever. We have people living there 14 years since the original, people who moved in. We still have those guys. So they're staying. It's a good mix at this point. It's very close to Gaston, facility which has a lot of companies, and so a lot of white collar job people have started coming and living on this property. And it's a full amenity. It has, even though it's only 76 units, but it has all the things that you would expect in a Class B building, swimming pool, children playground, clubhouse, dog park, hike and bike trail, picnic area, all of that. So it was, we are trying to change the demographics now.
So let's talk about the financing on this particular acquisition. What did you do from a finance perspective for the debt?
For this, we got a straightforward Freddie Mac small balance loan program. We got 80% loan to value. And when we actually closed it, our rate on this one was 4.97, which feels very high now. And, afterwards,
yes, I was actually thinking about that myself. I'm like, we're working on one right now that's like 3.6, 3.7.
Like 4.97. Maybe we should refi. We just got done with water submetering, and after we have about 3 months of data on that, we probably will look into refining it.
Yeah,
cash out refining it.
Yeah. And would you consider selling it at that time as well? Has there been enough of a value play on it to sell it, or would you just do the right refi?
We've been lucky with this property. This is our best performing asset. It's 99 built, and we got 60 a door. Given what we see in the market, I don't want to quote any number, but we feel that we can get all of our capital out with just a refi and still cash flow. So that's what we'll probably do. And the cost of refinancing is high. We have a step down prepay. So it's only been a year. It's 5% of the loan amount. Mm-hmm. So we'll have to do those numbers. We'll have to see what it gets appraised at, and we'll make a decision then. But our first thought process is that, to actually keep it on our books and return all the capital.
Mm-hmm. Okay. Now, when you return all the capital, do those original investors still stay in their same equity position in the deal?
Yes, absolutely. But they don't get the 8% pref that we have on this deal anymore because they don't have any capital remaining in the deal. What we would do is just straight equity split of 70-30. That's what we have on this deal. I know we haven't spoken about the structure, but yeah, that's what we have.
Yeah, that was the next thing we talk about a little bit there. So talk to us a little bit more about the structure you did with your investors on this one.
So on this one, we had 8% preferred return for our investors, and then 70-30 split after that. And we had 2% acquisition fee and 1% disposition fee, or capital event fee, whatever that is, if it is cash out refi. And that's it. Like no hurdles, nothing, no catch up, none of that.
Did you have an asset management fee in there?
Yes, we do have an asset management fee of
Okay.
2% of the gross rents.
Okay. And how did you end up raising the capital for this from those investors? Like not like how did you do it from those, but how did you find these investors and things like that?
So we partnered with few more people on this, and we were able to get it just within friends and family. We didn't even go outside of our circle to get money for this.
And how much were you raising for this one?
It was 1.55 million to be exact.
Okay. And with that, in that 1.55 million, how many investors do you have in the deal?
I think we have about 16.
Okay. So 16
16
investors.
or 17. I don't remember exactly. This includes us as well.
Sure.
Yeah.
And thinking about this entire property, can you think of anything that, any issue wise, any issues that actually came up throughout the entire process that we haven't talked about yet?
During acquisition phase, I would say this was one of our clean deals. Lucky enough to not have huge issues either with the seller. Seller was very accommodating. One thing I would say that happened, and that has happened to us afterwards, after we closed on this, is the Section 8 rents, whatever tenants we had on the property, went to the seller after we closed for the following month, because we closed on May 30 and all the transition had not happened in in the housing authority books. So all those rents went to the seller, and that was not really an issue. They were very quick to give it back to us as soon as we reached out.
Mm-hmm.
So other than that, nothing really.
How was it working with Freddie?
Freddie was pretty good to work with. We actually had, we have never seen this before, but on this particular property, when we were doing the due diligence and their team came on site, the actual underwriter on this deal also came to visit the property, and we became good friends since then. And since then, he has actually left Freddie Mac. Started working for some other firm, but we are still good friends. So it was a good experience to get to know him and get to see how Freddie thinks about these deals.
Sure. Did Freddie have any issues with it being light tech or even having some Section 8 on the property or anything like that?
Freddie will have an issue with light tech. I didn't even know we call that light tech. I always kept on calling it LIHTC. But yeah, light tech, Freddie will have an issue if this program is more than 2 years and you cannot get out of it for more than 2 years when it comes to small balance loan. So small balance loan is like your, to give you an analogy, is like your when you go out and buy a single family home, it's like a cookie cutter loan in Freddie's books. They have a very cookie cutter loan terms and all that. And in the loan document, if you read it, it says very clearly in that document that if you have more than 2 years remaining on the property with any of these programs, they will have an issue. And we actually had a deal after this one where we had more than 2 years, and Freddie said no.
And you said that's just for their small balance program?
Yeah, for conventional program, they do have a leeway. I have not looked into it, how much of the leeway they have, but I think they will do it, not given what's happening lately.
Yeah.
But in general, like going back few months, I think they would.
So I have two questions at the end that I always like to ask, and they're kind of contrasting questions. The first part of this question, or two question series, I guess, if you will, is what did you find that was easy or easier during the entire process that maybe you thought in the beginning would be a little bit harder?
In the beginning would be a little bit harder. Actually, this LIHTC or light tech, getting out of it, we thought it would be much harder, but it actually was not that hard. And one thing that we thought would be easy, but we are finding it very hard, is we got another 5 acres along with this parcel, which is actually buildable, and we can increase the footprint of this property from 76 to potentially 120. We don't know that whether we can do it fully or not, and that would be a completely separate deal if we were to do it. But we are looking into constructing or rezoning that side, and that process has been like very tedious. So
Yeah, that can definitely, the development side of things and getting the city approvals and various things like that can be quite tedious. But that's actually kind of an icing on the cake, if you will, right? To have that extra 5 acres to kind of play with.
oh yeah, no, that was completely an icing on the cake, and we would give first right of refusal to our existing investors because they invested in this deal. If we were to go and develop it, it would be a separate deal, but that's what we would do.
Yeah. So basically the current deal would just sell that parcel to that new group. And then if somebody wanted to have wanted to develop it before the other one, they could have it too.
Right. And then if everything goes through, we would probably sell it together.
Yeah.
Yeah.
Have you started to engage any developers that are kind of in that market to be able to draw up some plans and things like that? Or is it still kind of in the rezoning process?
No, we haven't really done much with this thing because we got busy with other things, and this kind of got put on the back burner. But we are going to actively look into it now that we have crossed 1 year, and everything that we said we would do, we have already done.
Yeah.
So yeah.
Well, remind me after the show, because I do have somebody I can put you in contact with that has a lot of experience in that specific space that could maybe guide you and direct you in a way that might help you guys. So let me know about that.
That would be great. Awesome. Thank you, Dan.
Yep. Well, how can the listeners reach out to you, Pancham, if they want to, dive into some of your other deals that you've done, or further the conversation with you further, and just kind of get in your world a little bit?
Sure. They can reach out to me directly. My email is my first name dot last name, which is pancham.gupta at mesoscapital.com, which is MESOS capital.com. And, I'm also starting a podcast. They can reach out to me on that on Facebook page of that as well. It's going to be called the Gold Collar Investor, for high paid professionals, helping them break out of Wall Street investments.
Awesome. Well, thank you so much for taking some time out of your schedule to be here. And I know you and I kind of went back and forth a couple of times on our schedules, and we've been wanting to get you on for quite some time. So thank you for carving out the time for us and sharing with our group, and looking forward to continuing to follow you as you guys grow as well.
No, absolutely my pleasure, Dan. And thanks for being patient. I know our first scheduled date was in April, and it's September now. Thank you.
Hey, I'm just glad we're face to face now, having this conversation, and we're able to share this, because it's an exciting property, and looking forward to kind of seeing what you guys do with this one, but also some of the future ones you guys have acquired as well.
Great, Dan. Nice talking to you.